Let me say something that might sound insane at first. For most people in America, your emergency fund might be sitting in the wrong place right now. Not stocks, not crypto, not even your checking account. I'm talking about your safe money. And here's the crazy part. There's an ETF built almost like digital cash that quietly pays you treasury level income, and almost nobody uses it the way they should. Today, we're talking about why some investors are asking, should my entire emergency fund be an SGOV? And trust me, this gets deeper than you think. Let's be honest for a second. Most people build an emergency fund like this. You work hard, you save 3 to 6 months of expenses, you put it in a savings account, you feel responsible, and then inflation eats 3 to 4% a year. Your bank pays you maybe 0.5% to 3%, and your money slowly loses power. Not dramatic, not scary, just silently weaker every year. And nobody talks about this part. Emergency funds are supposed to protect you, but they're also quietly costing you opportunity. Imagine this. You have $20,000 saved. If it earns near zero, you lose buying power. If it earns treasury-like yield, it at least keeps up. That difference over years? Thousands of dollars. Now enter something most beginners never hear about, SGOV. And before you click off thinking this is some risky Wall Street trick, it's actually almost boring, and that's why it's powerful. Let's explain this like you're a smart 15-year-old. SGOV is an ETF, but not a stock ETF, not a crypto ETF. It holds ultra-short US Treasury bonds, basically government debt that matures in 0 to 3 months. That means you're basically lending money to the US government for very short time periods, over and over again. And historically, US Treasuries are considered among the safest financial assets on Earth. Not zero risk, but extremely low default risk. As of 2026, SGOV tracks US Treasuries with maturities under 3 months. Expense ratio about 0.09%. 30-day SEC yield around 3.5% plus recently. Trailing yield roughly around 4% range depending on rates. Monthly distributions. And here's the important part. Duration is about 0.1 years. Interest rate risk is extremely tiny. But here's where it gets scary. Most people think safe money must sit in a bank, but banks take your money, buy treasuries, then pay you less than they earn. SGOV basically cuts out that middle layer. Meet Jake. Jake has $15,000 emergency fund, sits in checking account, earns basically nothing. Then he learns about Treasury ETFs. Now, instead of earning almost zero, he earns close to short-term Treasury rate. Not life-changing, but financially intelligent. You know how most people think like this: if my emergency fund is not sitting in a savings account, it must be risky. And honestly, that sounds logical at first, because banks feel safe. You see the app, you see the number. It feels guaranteed. But here's the part most people never think about. Banks can fail. It's rare, but it happens. We've literally seen banks collapse in the US in recent years. Now compare that to short-term US Treasuries. When you buy short-term Treasuries, you're basically lending money directly to the US government for a few weeks or months. And historically, the US government has an insane ability to raise taxes, borrow more money, or print money if things get really bad. Now, very important, this does not mean zero risk. Nothing in finance is zero risk. But historically, short-term treasuries have been considered one of the lowest risk assets in the entire global financial system. So the real conversation isn't, is it perfectly safe? The real conversation is it extremely low risk while still letting your money work a little? And that's a very different mindset. And nobody talks about this part. Emergency funds are not just about survival. They are about psychological freedom. If someone wanted to explore this idea, here's how it usually looks conceptually. Step 1. Keep immediate cash. Maybe 1 month expenses and checking. Step 2. Put remaining emergency money in ultra-safe yield asset. Treasury ETF, Treasury bills, money market. Step 3. Maintain access plan. Brokerage app, same day or next day liquidity planning. Because yes, ETFs are liquid, but not ATM instant cash. That matters. Let's be real, this is not perfect. Risks include market price small fluctuations, settlement time when selling, yield changes if interest rates drop, brokerage access dependency. SGOV price is usually stable around $100, but moves slightly due to dividend cycles and market mechanics. This is not a growth investment. It's a capital preservation plus yield tool. Here's the real hidden lesson. Wealthy people don't just focus on big returns. They optimize every dollar. Savings account money, idle cash, emergency reserves, tax strategy, liquidity layers. It's like building a financial fortress, not one wall, multiple defense layers. Think of your money like it has different jobs in your life. Your emergency fund, that's your protection layer. That's the money that keeps your life stable when something goes wrong. Your investments, that's your growth engine. That's the money working to make future you richer. And your cash flow, your income, your monthly money movement, that's your stability system. That's what keeps your day-to-day life running smoothly. Now, here's where something like SGOV comes in. It kind of sits in this middle zone. Not really growth investing, but not dead cash either. It's more like protection plus efficiency. You're still prioritizing safety, you're still prioritizing liquidity, but now your safe money is at least doing something for you, instead of just sitting there doing nothing. And once you understand that idea, you start looking at money very differently. Warren Buffett once said, "Do not risk what you have and need for what you don't have and don't need." Emergency fund money is need money, not risk money. So should you put your entire emergency fund in SGOV? Not automatically. But for many investors, using Treasury ETFs as part of emergency cash strategy is becoming more common because it matches three goals: safety, liquidity, yield. The real lesson isn't about SGOV. It's about something bigger. Most people focus only on making money. Very few focus on protecting money intelligently. And over decades, that difference compounds. Your emergency fund should not just sit. It should protect you. It should support you. And quietly, it should work for you. Because real financial intelligence isn't about getting rich fast. It's about making sure you never go broke. And that is how wealth actually survives generations.